I think the challenges advisors face, there's really three of them. First of all, we've got the demographic issue, and everyone's aware of those statistics. We've got 10,000 baby boomers per day retiring. And then secondly, we have longevity to consider. And I know our good friends at the Stanford Center on Longevity like to refer to this as a 100-year life that we have to plan for, and that's really true. So if we're retiring in our 60s, we're looking at 20 or 30 years that we have to fund a retirement. And then the third challenge is we have a very complicated economy. Our global economy is just complex, and things have to be put in perspective to make this all work out. Well, I do use a reverse mortgage in my practice. I've actually been using it for probably 15 years now. I felt, when I was first introduced to them, I felt that the reverse mortgage was a great opportunity to bring home equity into the financial planning process, which it really wasn't there before. Home equity has always been kind of left on the sidelines. But with the products that we have today now, we've got products with loan amounts up to $4 million. So all the proceeds from a reverse are income tax free because they are loan proceeds, but we've got income tax free proceeds up to $4 million. And there's no impact on the household budget because there's never a required principal or interest payment for as long as that borrower is living in the home. So now we've got a lot of money available, no impact on the budget, and we can solve for a lot of retirement planning issues with this product. Cash flow management, I think that's probably the one that we're seeing reverse mortgage used for most right now in this current environment. But what it really does is, in many cases, we can eliminate an existing mortgage so we can save the client from having to make a monthly payment. And a quick example I have of that is one client that we were working with. They were 68 years old. They had to take a 6% distribution rate from their investments because they had a $2,500 per month mortgage payment. So we put a reverse in place, got rid of the mortgage payment, and we were able to drop the distribution rate from 6% to 3.5%. So even though we're going to accrue some debt against the property, we're making up for it because we're saving the invested assets, and that's their income stream for the long term. So it worked out very well for them. The long-term care, that's really worked out well, and looking at the environment we're in right now also, where more and more people, due to COVID, et cetera, are saying, I want to stay in my house the rest of my life. I do not want to go into an institution. So if you're looking at your home as being your final place, using the home equity for long-term care makes all the sense in the world. You can put a line of credit, for example, in place on that home. It will be there when you need it. You don't have to file any medical reports to have access to it. It's your money. It's there when you need it. You're saving thousands of dollars per year in premiums that you would otherwise be paying for an insurance policy, and yet you've managed that long-term care risk. You won't have to draw down invested assets to manage that exposure. The Roth conversion, this is really kind of a newer concept that we've been talking about lately, but I think it makes all the sense in the world. Roth conversions are really a great income and estate planning tool, ideal for the mass affluent client base. And yet those clients are the ones that really don't have a lot of the liquid capital needed to pay the tax bills as we're doing the conversions. So by putting the home equity, reverse mortgage rather, in place, now they can draw from the home equity to pay the tax bills. And again, this works out very well for people who are planning to stay in that home the rest of their life. So now they're helping to ensure an income tax-free income stream for the rest of their life, and also enhancing their estate plan as well. One of the advantages we have at Finance of America Reverse is really our retirement strategies division. This is a division that I am a part of. I am a financial advisor, so it's really a perspective that I can bring to the conversation, that I've been in your shoes, I know what you're going through, I know the gaps in a retirement plan, and I can help you fill those gaps. My whole division can help you fill those gaps with our programs. And we also have prior to conversations, you can always go to our website, which is homeequityu.com. We have access there to a calculator where you can plug in some numbers and get an idea of what your clients may be eligible for. We have CE classes available for CFPs. But more importantly, I think it's just an idea or a way to get some information about the program. But honestly, it works out great if you contact us directly. As I said, I know where you're coming from. I know the position that your clients are in, and I love to have those conversations with you and just see if we can't strategize and put together something that makes sense.